Here are two simple ways that beginner stock investors can start breaking out. And the first applies specifically to you if you check the following boxes. You have 0 to 1 year of trading experience. You have an account size of $0 to $50,000, and you have 5 minutes or less each week that you have available to trade. The second strategy, a little bit later on in this video, is for anybody else, but you're still going to want to hear this first part because we just take what we learned in lesson 1 and juicing it up with strategy number 2. So with less than 5 minutes, an account size of 0 to 50 grand, and only having 0 to 1 year of trading experience, this is what you need to do to break out. So the great thing about this strategy is, again, it works for any account size under $50,000. It can go above 50 as well, but it's more successful for those of you under $50,000 who want to invest long-term without a lot of time commitment. This is very, very small, 5 minutes a week. First thing you have to do is go and find the SPY, the S&P 500. It is the top index fund that is regularly traded in the stock market. And why is that? Because it is a stable product of the broader kind of collection of companies in the US. And long-term, it has a great track record of going up. What you want to see on a chart when you're looking at stocks is going up to the right, which this is ever since 08. It's kind of been slowly sloping up to the right. That way is the way to profit right there. And as you're buying on these points along the way, you're just kind of putting your money in, like and averaging into the market, as they call it, by buying shares at random intervals right there at a continual basis. So every week, I would say you do this. You put a little bit of money into your trading account. You can put a payment in through your bank. You can go and put in your account like Interactive Brokers right here. And all you'd have to do is go in once the money's in your account and in there, make an auto transfer, make it auto deposit. Click on the SPY. If it's not in there already, you go SPY and find it, pull it up. You want the ARCA stock. It'll be right there. It pops in. And all you have to do is go and click the buy order right here, the order ticket, Interactive Brokers. You can buy different kind of quantities of shares if you want to, or if you don't want to do it by numbers of shares, you want to do it by the number of dollars in your account, click this little USD button up here and just scroll down. Scroll down to where your account size is at. Let's say $1,500. If you're starting with $1,500 cash in your account, you do that, or you go even lower and go to $500, or you go to 250, whatever you want to do. Put that dollar amount in there, buy what's known as a fractional share. You can see right there, 0.55 of a share, not a whole share, but long-term over time, you will build that up to the point where you have lots and lots of shares in the market. You don't have to think about it. You don't have to put any more time in it than that. Just do this once a week or once a month even. 5 minutes is all you need. Limit order. Come in here, click this, click the mid price. That's going to get you the best possible price to buy those shares, however many it may be. Click on the submit button right there. Override and transmit. You've got an order in here for 250 shares of US dollars of the stock. That will translate to a certain fractional share again, if you want to jack that up. Or as you get more money in your account, again, you can do quantities, you can do US dollars, whatever your account size is, work it for you. But this takes all the guesswork out of it. You're buying the market overall, and you're locking yourself into an 8 to 10% gain long term. The only caveat here is that you have to be willing to kind of ride with the ups and downs, because there are pullbacks along the way. As long as you leave your money invested and don't pull it out, just remember to keep the long-term perspective in view. Or this is going to be long-term. It's going to go up. It's going to have pullbacks along the way, but you're okay letting your money ride it out and make those 8 or 10% returns each year. So now it's time for strategy number 2. And we're taking the building blocks from the first phase and just adding to it to kind of juice up the returns. Here's how it works. Again, make sure you have that 1 year of experience and $50,000 in your trading account to make this work and make it work efficiently for you to break out for your chalk trading account. We are again sticking with the SPY. We're not changing anything up at all, staying with the same product, so it makes it super easy still. We're gonna do this again in 5 minutes or less. All you have to do, stick with the SPY, not really worried about the price again, because in the first part, we weren't worried about the price fluctuation. We just wanted to buy and buy and buy and long-term accumulate this thing that's going to hopefully go up in value, which it has been for the last 90 years since its inception. We're going to keep adding that, but just give it a little bit of a juice here. Here's how we do it. In your Interactive Brokers trading or your trading platform, you have the option to sell what's known as naked puts on the SPY or the SPY. All this involves you doing is getting paid to buy the same shares you would have bought in the same phase 1. You're just going to get paid a little bit of money to buy those shares again. What do I mean by this? Well, right now, you can see that the stock price of SPY is right at $4.49. Okay. If you were to buy 100 shares, it cost you $4.49 times 100, which would be roughly $44,900, which is why you have the 50K limit to be able to do this in your account. Otherwise, you wouldn't be able to buy 100 shares at one time. What we're going to do then is open up our options chain over here. And this chain allows us to sell what's known as an options contract, or a put option contract more specifically. We're going to pick an expiration date very quickly here, October 20th. And just to illustrate the point, it's 45 days away. So this contract will be valid for 45 days. That means that at the end of the 45-day period, you either have to buy 100 shares of the stock you want to own anyway, which again, this is SPY. We want to buy these all day long, just like we did in phase one. But here in phase two, you're going to buy those stocks. The current price is $4.49. We're going to sell a contract here at $4.49. And when we do this, we get paid $703 to sell the contract. Why would somebody want to pay us that much money to buy the same shares we want to buy anyway? It's because that they're betting that the stock market is going to go down and they want to offload their shares that they don't want to keep long term. We're okay with buying these shares at the $4.49 price because we buy them anyway, right? We just looked at it and we saw it. It's right at $4.49 right here. Let's go back to the SPY. We're really happy buying at $4.49. We're really happy buying it at $4.35 or down here or down here. We know that it goes up long term, and that's what we're kind of playing and making our bet on, right? So if we're going to be okay owning it down here at $3.50, $3.34, $3.90, whatever, $400, we're okay if it goes down a little bit. We want to get paid to do that. So instead of paying full pop for $4.49 right here, so $44,900 again, we want to go over here into our options chain again and just sell that put 45 days out at $4.49. Or if we want to go a little bit further away from the price right now, we could potentially buy it for $4.45 or $4.40 and still make like $430 to do that. Let's click this one right here, $4.40. This is what's known as out of the money right there because it's below the current stock price on the put side. We can then sell this bid right here at $4.30. This limit order is going to be $4.30. We'll just change that. Okay. Quantity of one, limit order. We're going to sell it. And then we go and click the plus button there, margin performance. We get paid $430 US. So it's going to convert to Canadian for myself here in this account, but you get paid $430 US to sell this contract and potentially have to buy 100 shares of the SPY, which we talked about in phase one, something we want to own anyway right here, but you get paid $430 to do it, which means that in the original example, right, $4.49 times 100 shares, it cost you $44,900, but we just got paid in this example $430. So we can subtract $430 from our purchase price, which means we got to buy these shares for $44,470, a little bit less than everybody else out there buying at retail value, just buying it on the chart as we were in phase number one. The only caveat here is that to be able to do this safely and to buy those potential shares at $4.49 or $4.40, whatever it may be, you need to have at least 100 shares worth of income or cash in your account. So again, you want to only do this if your account is at a certain size at $4.49.34 times 100. That would want to be your minimum amount to do this safely without using what's known as margin. Seriously though, how cool is that? Getting paid to buy shares of stock you already wanted to own. If you like that, make sure you like this video. If you want to know another example of how this works with other companies that are a little bit less expensive than the SPY, make sure you check this out right here.